Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I'd just like to go over the massive pump that we're having on Bitcoin because, of course, this was an incredible bounce and there's a lot to discuss. How long will it last? Is it a real pump? Is this a fake out? Could there be lower numbers in our future or are we going to the moon? Those things I'll try to answer in this episode, but of course, I do want to point out that we did hit one of my DCA zones, and you would be up almost 15%, or perhaps even more, depending on where you caught the wick, on Bitcoin alone. Had had that DCA point as one of yours. In this context, DCA for me does not mean something that's a long term hold. For me, it means something to trade. Of course, you guys know the philosophy here at Alpha Commission always be trading. We do not want to be holding on to positions in a long term downtrend. And we've been in a downtrend since $69,000. We are now $30,000, less than half. Okay, we are less than half the value we were at 69,000, and this thing does in fact have room to go lower. So guys, just please understand that where I'm coming from when I mention these things, it's not for you to necessarily fill your pockets up with anything and hold on to them like some precious jewels. These are junk. It's like my friend Crypto Retta says, these coins ain't loyal. And you better kick them to the side of the road after you had your fun, because you do not want to be marrying these Ponzi schemes. Okay, a lot of them are Ponzi schemes. A lot of them are going to die in the bear market. A lot of them have corrupt and criminal devs. A lot of them have good ones, but a lot of them have corrupt and criminal devs, and then vampire VCs and investors who will dump on your head if you do not take your profits. So the philosophy here, always be taking your profit. Don't get greedy, take your profit. When you see you have profit, take your profit. We are in a downtrend, right? And of course, we always talk from a position of spot here. I am not talking about leverage. Leverage is a good way to get wrecked. And, anyway, I don't think that I'm the best person to speak about leverage with. So, without further ado, let's start to address some things and also the credibility of this channel. I know it's been a rocky start since the beginning, but of course, we do want to try to show that what is being presented here is at least credible and that there are um, consistent wins behind what is said. So, in a previous episode, I was showing you about the 10 coins that I called out, which all pumped like a 20 to 40% based upon a very rare call that I make. And I want to show you one of the macro calls that I made. If we go ahead and check this one out, you can see I mentioned that, if Bitcoin broke down below that 43,800 area, or had a significant close below 44,000, that I would expect a capitulation event. And of course, I drew it on this image um, in a way that people could understand in advance, right? Which is, of course, using this kind of fractal. And then I just suggested various perhaps bounce points along the way down based upon the fractal. However, this was my projection, and I had a pretty high faith conviction in this. I think you guys know, if you've been following this channel, that I've been warning you very strongly ever since we were 38,000 and made our way up to 48,000, that if we broke down or that once we hit that $47,000 to $48,000 area, that we were likely to break down to 44,000, and if we lost 44,000, that it would be only a matter of time until we got to 37,000, and if we lost 37,000, it would be just a dire capitulation event, right? And not to underscore too much, but just proving that that is the call that I made for this market, because a lot of people were just, moon boys, and they have no credibility. They've lost all of their credibility. I hope those crypto Twitter gurus and those shill kind of moon boy pie in the sky, fake trader, kind of corrupt, YouTubers and all these influencers who are just really dirty in this industry, just getting you wrecked. I hope they are flushed out of the space in this bear market. And I'm going to be trying to give you the best advice that I can, and continue to do so, just like I gave in this message previously. So let's go ahead and compare that to the actual chart. And of course, this is the actual chart. So this is what I projected, and this is the actual chart. Projection, actual chart, almost identical. Okay, guys. So when I say something is a call, right, which I very, very rarely do, but when I say something is a call, I'm going to do my best to be as honest with you, and even if it's a hard truth, I'm going to put it out there and I'm going to take all the heat. People were telling me this couldn't happen, like it's impossible for us to do this. There's just too much support below us. But hey, guys, it's macroeconomics, okay? It's macroeconomics. It's the stock market. It's politics. It's all of these things, okay? I'm studied in this stuff. I have a international relations and global economics, background. That's where I'm coming from international business. I understand how these big picture things work together, like the Russia-Ukraine war, and of course, all of this inflation in the United States and globally, the Federal Reserves, how the stock market interacts with all of these things, how these things interact with the DXY dollar, and of course, bonds, blah, blah, blah. So all of this stuff comes together along with business interests, and it just painted a picture that we were about to have a major capitulation event, and I was doing my best to give a warning. Some of you may think I was a little bit too harsh, and perhaps I was, because, I would bicker with those who were just, pie in the sky moon boys who had a very small sliver of the picture, because all that they've been doing is looking at, bullish crypto charts, right? And they have all this hopium in their hearts very innocently and very sincerely. I don't think that they are liars or they're trying to trick anyone. I'm talking about very sincere people who really had high expectations and wanted things to go well. Even I wanted a bull run. But the call that I had to make was that this was most likely going to be a bear market if we couldn't push through $47,000 to $48,000, and if we lost $44,000, it was game over. And $37,000, losing that was the nail in the coffin. And if you wanted one last chance for bullishness, it was that $31,500 level, which right now we are kind of approaching, but the dynamics of the market have shifted, and I'll get to that later. Some of you may think, oh, well, if we acquire the $31,500 position now, does that mean that it could be a turnaround? Because that's what you said earlier. And if we are able to make these new levels or climb some levels up, does that mean that we're going to turn around? And the answer, unfortunately, is no, and it's because of the behavior of the stock market. Usually, when you touch those lower levels and you semi break through the support, which the stock market has, you come back to those levels. It's almost a law of physics in the stock market, and I wish it wasn't, because it would be much easier to climb our way back out. But once we open up those Pandora boxes, right, those gates to hell, unfortunately, the doorway is left open, and so it's highly likely you fall back through it. So any type of relief rally we get, any type of mini little bullish trend that we get is most likely going to be a bull trap. And I'm saying this from my heart. I'm not trying to sell you anything. I'm not trying to get more viewers. People don't like hearing this kind of stuff. It offends people who have their heart and soul in this industry. And it's just the truth. Okay? It's just the truth. So I wanted to get that credibility out there because when I say this, I'm not trying to hurt or offend anybody. And although sometimes I speak harshly, and sometimes truths are harsh, you have to hear the truth in order to have a full perspective, okay? And this is just my truth. You can listen to other sources if you want, but ask yourself, were they right or were they wrong? And if they were wrong, try to narrow down the influencers who were heavily wrong and got people wrecked, right? I mean, some of these guys, they just destroyed lives. And there will be suicides this week. There already are. There already have been. Okay. So, without further ado, let's just move on. That was the dirty business of having to understand, where we've been and where we're going. And, this is our truth that we have been down here and most likely we're going to return. Let's go ahead and there was a request for looking at the let's see, what do we have here? Let's look at the grayscale charts just to see what's been going on with grayscale. And in this case, you can see those head and shoulders that I pointed out, how they tend to work out. See this? That drop. See this? That drop. And then let's go ahead and see what this is doing here. We basically got that drop as well, right? A little bit of a wick area, so not perfect. But look at this diagonal. I told you, like, diagonals are king in this industry, and they are not proper support. But for some reason, they line up with the algorithms, okay? So perhaps I could adjust this a little bit differently, and maybe, this is taller or shorter or whatever. It doesn't really matter. The point is that we had this breakdown, and it's not so much that this was a head and shoulders, because this actually isn't a head and shoulders right here. It's just that this sort of pattern has been playing out on the grayscale chart. And when we got into this kind of like rounded top breakdown area right here, just most likely that type of a pattern was going to repeat, and it just happened to be extremely intense because that was the start of a capitulation type event, sort of like over here. And let's go ahead and look at the fuller grayscale chart because, of course, this one, I was suggesting there was a diagonal here the last time, right? And this could potentially have been a bullish flag, if we wanted to consider this kind of like a flag or something, um, and fill you with some hopium, perhaps, perhaps there is this flag that could just take us, on this kind of moon boy journey now that we've touched the bottom here. But there's also this flag, which is kind of an accumulation one. And you can make the argument that if we find our way back into it, and let me just mark this out, if we find our way back into this thing, and maybe that was a fake out, we get up here, and then we could go on our way, just like what I was pointing out with the other flag. Well, I guess that's possible. Like this could happen. What could possibly trigger that? I don't know, like peace with Ukraine and Russia. That would probably bolster the stock market. Some decision by the Fed to lower interest rates. Uh, there's a number of things that could possibly trigger good news, and so that's why I do suggest buying at support, which I was suggesting here, on the Bitcoin chart, but of course it has the analogy on the grayscale chart. But overall, I wouldn't really expect this. Again, I think that what we're witnessing is a breakdown of this triangle here. And, they don't have very high likelihoods of breaking one way or the other. It's just a little bit statistically more likely to break one way than the other. But this one has broken down. And so if we do see a test back up to the previous support, that wouldn't be too crazy. And then if we find ourselves retesting the lows and chopping sideways or doing something that's kind of a bigger part of capitulation, sort of like what we did here. We have the analogy over here, right? This kind of wedge, and then it just chopped around, it lost it, came back up, and then just chopped around until finally it was able to go, right? And that took a very long time. That took from 2018 all the way to 2020, and it was only catalyzed by that free money in the system. So take it with a grain of salt that we're going to have some type of skyrocket as soon as 2018 did, right? If it took this one approximately 2 years just to get back to where it broke down from, and then it had this massive journey on the free money that the Federal Reserves all across the world were printing and handing out to businesses, etc. Well, this one might have a slower go of it, and that's just because the feds are not going to be printing money, and so it might take an extra year. However, if you are able to catch these bottoms, then you might be able to ride these, kind of like pumps along the way. And even if it takes a very long time to get to our all-time high, it could take, who knows, it could take 3 years to get back to our previous all-time highs. At least you're buying in so low that you're likely to have pumps along the way, assuming we don't break down further than people could imagine, which is possible. We do have to leave that possibility open. And so don't put all your eggs in one basket, guys, right? Like the world's pretty dangerous. Trying to delete this spot here. Okay, there we go. Let's see. Again, like that's it for Grayscale, I think. It's very interesting that we have this diagonal support and that it did wick right to the diagonal support that I had marked out. So yeah, had a request for Grayscale. Interesting to look at. One thing that I really want to take a look at next is, of course, my favorite, the NAS 100. I do think that this is getting things right more than the grayscale chart these days. The grayscale chart was good during the days of free money, but now it's basically in the same boat that Bitcoin is in, and they're being controlled mostly by the stocks here. When I started recording, this hadn't pumped up here, so this is good. This is actually a massive pump right now that we're having on the stock index, the NAS 100, which is, of course, that we're re-entering the previous kind of channel that we had been carving out here, right? Like this type of area. And that's actually really good because if you missed buying in here and you happen to be buying in here, there is a good chance that you could test the top of this channel again, right? And so perhaps on a pullback, buy back in, and then test the top of the channel. And Bitcoin might be following the path of the stock market, sort of like when it was here and then it came back here. It's just that there's a high likelihood that this is a fake out and we eventually come back to these lower levels, okay? You see this happening all the time, right? Like this was kind of a channel, but it broke down. It came up into that channel, tested the top, and then it broke down again. And then it did it again. It went up here, tested this area, and then it broke down again and kept going. You see how that was like two massive fake outs? And so right now we have like this kind of fake out, and we're likely to put in another fake out. You see here was a fake out, and here was another massive fake out. It was a couple touches actually, And so it just took a while to get there. And of course, the same thing at the top of the chart, right? This is how they get you guys, right? It's kind of like a fake out, like, oh, we're going to the moon. Nope. Oh, we're going to the moon again. Nope. Oh, we're going to the moon. Nope. Right? So you have this one, two, you have this one, two, you have this one, two, three, and then you have one, two. It could be three, it could be anything, right? We don't know what the final format is, but you really want to be taking out these next higher levels just to get a better sense of bullishness rather than just recapturing the previous levels high. It's just how these markets work because more likely you're going to come back to the bottom. So guys, take your profits, always be taking profits. The motto here is always be taking profits, okay? And of course, the other motto is buy at support. Don't buy breakouts. Buy at support. Okay. If your breakout happens to align with support, that's okay, right? Maybe you retest support, you find some stability there, and then you're going to play this trade with a stop loss perhaps under your buy-in point. That's perfectly fine. But with wedges and things, like let's just call this a wedge, right? Like that's a wedge, and then we came here, and then I'm gonna buy. We broke out. I'm gonna buy the breakout. Whoops, whoops. Okay, like breakouts can wreck you. Okay, like if you're a breakout trader, you really have to know what you're doing and make sure that you're doing everything right. But if you bought at support, here's a support, here's a support, here's a support, you could have this whole range to play with. And even if you didn't break out, you could have still made profit. It's really scary to buy at support. But when I mark out these supports, and when you see that you're at a support, then if you're going to be a trader, you should understand that there are risks and that you should have a stop loss. But buying at support is the best place. You don't want to be buying at the middle of the range. You don't want to be, chasing the pump and buying close to the top of the range, at resistance. You want it to prove that it can be at a support of one of these levels, and then you have a higher likelihood that you're going to test the top of the range. I mean, look at this, right? It gets to support, it tests the top of the range, goes back to support, tests the top of the range, goes back to support. Okay, this one may have triggered your stop loss. Sorry, you lost one, but you had 1, 2 so far, but you lost one, just barely, a little bit. Came back up, tested support, got the top of the range, right? I mean, so you got 3 really nice trades and you only got stopped out once. Okay, like so you play that kind of statistics. Even in a downtrend, you were able to play long. And of course, if you're too nervous to take a trade or you don't fully understand your game plan or your risk management, then it's okay not to take the trade. You might want to just wait for the macro to be clearing up on stocks and Bitcoin before you start DCAing in or taking plays, right? But I do believe this pump is real. I was going to make this video to suggest that it looked like we were probably going to break through here and that Bitcoin also probably would be pumping because of that and that it was a real pump. In fact, this does appear to have some volume and intensity with it. And so probably we are going to test the top of this. It's probably going to be too late when you see this video. Not sure. We could get a retest and then go. But this looks pretty real to me. And it was looking really good this morning. That's why I'm making this video. And of course, Bitcoin has been looking really good. You can see I have these levels marked out because this is where I would assume that, over the course of the weekend, maybe, or a couple weeks, maybe we could make our way up to this area, which could be, 32, it could be 35, it could be 36. I don't know, somewhere around this area. But then I would really expect us to get rejected here. We've pretty much, um, we've pretty much flipped this area, and we might come back to retest it and then get a hard rejection, just based upon the macroeconomics in the world. But obviously we've been pumping. Like, let me go ahead and just delete this. If we measure from the wick here, This has been a nice 21% pump on Bitcoin, guys, on Bitcoin. That is insane. That is a massive, massive pump. And what it reminds me of is these pumps during these capitulations during summer 2021, where you had like, you know, I mean, you can't see every candle here because it's so compacted, but they've had pumps up to 40%, right? Up to 40%. But what happened? You kept chopping down, right? Kept chopping down. And I would expect that we're probably doing something similar right now. In my friends group, I did call this a legitimate capitulation candle. This is the beginning of capitulation, I believe. This was kind of panic, right? And these signs of weakness, that was kind of panic. The panic was building, hence the sign of weaknesses, and then everything just tipped over, and now we're starting that capitulation phase. And if we get 20 to 40% pumps while we capitulate, who knows how low it could go, in the final capitulation. It could stay steady at this level and we just retest the lows, or it could move its way up a bit, and then come down, or it could just grind down the way that it did last summer. We have no idea, but that's just my market theory right now. And I'm sticking with my market theory because it's worked so far and I don't see any catalysts for bullishness. Okay. I only see likelihoods of retail FOMO, like all these guys seeing everything being undervalued, quote unquote undervalued. And so they're just FOMOing in, like retail consumers do. Like they just FOMO in at low prices, and then the smart money dumps on their head, and the cycle continues, right? And that's what this is all about until they get ground down, and then this is a capitulation event, and then this is total capitulation until retail just gets ground down into nothing, and they have no more willpower. And then the smart money says, hey, like these guys are totally exhausted. Let's go for it. Right? Because they don't want you to take part of it. They want to be the guys taking part of it, right? They want to be alone, having taken all of your coins when you got totally exhausted. And you can see that happened over here in 2018 in a different way. And by the way, like the tops of these things are also capitulatory events, right? Like they are here to grind you down. And you can see the stages if you start to think about it, like with my eyes, right? Like just destroying you, right? Like that would just destroyed you. And then this was the capitulation to just grind it out until you have no more willpower to live, right? Just you can't even imagine like trading in this market anymore. But because, everyone got in down here and they had a massive bull run, they weren't totally broken yet. So they had to take you down another level just to completely break your spirit. And then once your spirit was totally broken and no one really wanted to get back in, then they sent it, right? So there can be multiple stages to capitulation, and we don't actually know where the bottom is. It is possible that we hit it, but most likely will grind out anyway as they break the most bullish people's will, right? And so if whatever the pump is, it's probably going to be a fake pump, and then they're just going to grind everyone down who's been buying in on these volume candles. Grind you down, okay? It's highly, highly, highly unlikely that we get sent down like this and then just go to the moon with all the factors in the world basically being the same as what ground us down here, right? Like nothing has changed. So why would we just suddenly go back up to these prices? You guys don't have to feel pressured. If you missed buying at support, just wait for a pullback or something, right? Like wait for a pullback, and that would be a better opportunity. Like if you think in the previous summer, right? We had massive 40% pumps and then massive 40% dumps, right? And we just kept doing that until we ground down to zero. And, just like a net zero up and down, right? And most likely that's what's going to happen, okay? One thing that we do have going on in this $35,000 area, which is why I've got my eye kind of keenly targeted there, is this CME gap, which you can see it right here on the daily. And of course, um, the institutions love to fill CME gaps because data is everything to them. That's how they make their algorithms and stuff work. So if we came up here, you cannot draw a straight line on the daily chart for some reason on TradingView. But if we were able to come, back up here, close the CME gap, most likely we're going to work our way back down to the lows and then grind it out, right? That's my hypothesis. That's what I'm working on. But this bullishness does look pretty reasonable as long as the stock markets aren't faking people out today, and as long as they can stay within this higher range, right? As long as they can keep in that higher range. Just I would again expect that we would have another breakdown. Kind of like this. This is the perfect example, like right here. This is a great example. So we were just grinding our way down, found some levels, broke down, came here. Yeah, we had a couple weeks maybe of bullishness, and then we just capitulated. And then we pumped after everyone got ground down. And then there's a second level of this, right? Just grinding everyone down. And sometimes you can come back up, but you do just keep going down, right? And it's just the macroeconomics. It's just the world situation right now. There's not much that we can do about it. You don't want to be a moon boy in this environment. You want to be a trader, and you want to DCA at these really super low levels. When Bitcoin's on those levels. So we're going to start approaching those areas which are not the DCA levels. And that's how they're going to trick you and dump on your head so that they can, when I say they, the big institutions and globalist billionaires and the VCs and, all of this kind of more dirty money, they're going to dump on you after you FOMO so that we can get back to those good levels where they can accumulate, and they're going to grind you down, most likely. Let's put some things on the chart just to give some context. And I think we can take off this area. You guys can see what I'm targeting as potentially we can grind out to the upside. And if we do get shot down, it's going to be because of stocks. So keep your eye on stocks. But let's see here. Yep. Of course, I had been talking about these Wyckoff patterns. And, there's not much reason to, go over it too much. But just want to show you again, like the Wyckoff pattern that we're in. And so, there we go. Let's see, how can I line that up better? Well, that's pretty good. So you can see this is a this is a downward slope, and then chopping it out, and then the Wyckoff upthrust, right? And then the last point of supply, and then the signs of weakness, and then the markdown, which leads to capitulation. And then they're going to have a capitulation. They're going to have an accumulation pattern. When I say they, I obviously mean the big institutions and billionaires and VCs and blah, 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 because a lot of them are also underwater. Not all of them got it right. They're all competing with each other. This isn't some mass conspiracy or anything. They're all competing with each other. And, the net effect of their behaviors is probably going to create an accumulation pattern at some point. And you want to accumulate with them. Pardon me. You don't want to necessarily be out of the market during those moments. But just be aware, these are very high levels, and if we bounce up, just forget about it. Just wait until we have real confirmation. Don't be in any kind of a rush. These are the patterns that I was suggesting that we were breaking down from. So we broke up into this one, and we broke down from this one. And they're kind of the brother and sister, right? They're the different Wyckoff patterns. And that, of course, was going along with this death cross that I was telling you about. And if you really pay attention, you can see that we broke down right where I suggested. I didn't move this a red or yellow line. I suggested that we would start to break down on that red dashed line, and that we could go all the way until that yellow line, most likely. And then once we enter this kind of circle region, that would probably be where the accumulation or the final capitulation, takes place. So the reason why this is centered up here is because we didn't know if we were going to be able to escape that death cross if we had gotten over this blue line, but we didn't. We broke under it, and so, of course, this circle area applies down here. And this is the support that we've been on. So it's interesting that we're breaking back into support. It's almost like this is the wedge now, and that this is almost secondary, which it isn't true. This is where the supply area is and everything. But this wick was actually very powerful to get us back into this formation. And if that was a fake out to the downside, just like this was a fake out to the upside, that could imply, and I mentioned this in the previous episode, that could imply that we could get up to that $35,000 to $36,000 area, which is, of course, what I was pointing out. Look at that. Look how that corresponds perfectly. I didn't match these up previously. I just used a totally different theory for that. And look how that would match pretty well. And then what I would expect is that we grind back down, right? And either we get to the bottom of this wedge like this and then go, or we break down again for real, or something, right? The point is that I don't really see this as breaking to the upside. If we did, that would be incredible. But I don't want you guys to be bearish. You guys have to remember, even in a down market, like there will be some potential to pump. And this is a real pump. Bitcoin has moved 20%, over 20%. That is an incredible pump. But you had to buy the bottom of the wick. You don't chase the pump. You wait for the pullback, or you wait for some confirmation of support. And the fact that we're finding this double support at the same time that the stock market is returning to its higher level of support is kind of a good indication to me that we could potentially, put in this type of run before we dip back down, right? Got rejected here, probably get rejected here again, right? And that's just a hypothesis. None of that has to happen. That's not a call that I'm making. I have no idea what stocks are going to do in the next week, but I could see that potentially for this weekend in order to just retest these areas. And let me go ahead and put this one back on. That would also be pretty consistent with retesting the bottom of all that support that we had in this area, right? Just like this price action might just want to retest what it broke down from before it breaks down again. So this is actually very cool that we're coming back up here, and you guys saw me build this out in a previous episode. So it's very cool that we're coming right back to that support area, and that this wick was bought up very quickly. Let's see. Let's go ahead and put our EMAs on the weekly because we just want to see where we've been. This, I think, I didn't give this enough consideration. You know, my friend Crypto Retta mentioned, that, hey Sky, like, we're at the 200 EMA, like maybe this could be the bottom. And I thought, you know what, this isn't going to be the bottom because we're probably going to chop it out just like we did here. But what I forgot to give consideration to, and what I realized is what he was saying is that it's a bouncy area. Like anytime we get to that 200 EMA, it's a very bouncy area, and it could actually be the bottom. I personally don't have that theory because my macroeconomic outlook is very negative at the moment, which isn't necessarily the fault of Bitcoin or crypto, although of course Luna was just disgusting. But it's mostly because of other things going on in the world. And in normal conditions, I would agree. I would have very quickly agreed that, yeah, most likely that's going to be the bottom, especially when we consider um, this type of formation. I mean, look at that. Like that's a beautiful. Like we came to the 200 EMA just like back here in 2018, just like we had wicks under it, but the candle bodies were sitting on the 200 EMA, just like the COVID dump. And so, that could potentially be the bottom of this whole capitulation. It could be the bottom. Like we have to give legitimate credit to that. And the fact that it's pumped up to these levels of support, we have to consider that it could potentially grind out up here and then go on its way, even if it went sideways for months, or even a year, who knows, Like we have to consider that that's a very strong possibility. And of course, just my market theory is that that's not going to be the case. That would be the case under normal market conditions, right? That Bitcoin has experienced during its entire lifetime. But as I've been showing you guys, most likely we're going to continue to break down on the NAS 100 and on the on the S&P 500 and on these other indices. We're going to just continue to break down, most likely to these really low levels. You know, yeah, I mean, we can get lower. We can get lower. Like we always have these little bounces along the way, but we can get lower. And the Dow Jones isn't to its 200 EMA yet. The Nasdaq isn't to its 200 EMA. The S&P is not to its 200 EMA, and they always come back to their 200 EMAs as well, right? So how can I just believe that this is over? I have a strong hypothesis that we are probably going to check out these lower 3,000. You see this wick like all the way, past this 300 MA moving average, 300 moving average, and it just like broke through the 200 EMA. And so probably somewhere between these areas is where we're going to end up, most likely along this kind of support, like maybe 3,200 for the S&P. And so that could be a significant ways down. It could take time for that all to grind out. There's going to be bounces just like this one along the way, but probably we're going to keep grinding this out. And I think the victim of that is going to be Bitcoin, where Bitcoin doesn't get a normal, um, it doesn't get a normal capitulation event, but rather it might get this kind of like, double capitulation event, or something that just is more traumatic than what we've seen before. And that's why I have all these different levels, of course, for my DCA zones, because I have no idea how fast and how hard the stock market is going to drop, and whether or not Bitcoin and crypto can recover fast enough to overcome the speed at which the stock market is crashing. If you see the fib trends that I put up on the screen right now, this is very interesting though. And again, this is something that I should have given a little bit more credit when I was talking with my friend Crypto Reda. He's a very smart man. Uh, but I didn't check the fibs, but if you double check your fibs, you can see we have kind of like one of those golden zones right where we wicked to, right to the 200 EMA. And that should have also suggested that there was going to be a nice bounce. This I'm pulling from the bottom of the market in 2018 to the top here. And I used this top previously and the bottom right here in order to find out where we could get rejected from. This golden zone, that was a rejection zone. And then this one is also kind of a rejection zone or a bounce zone because it's the other way around. And so this golden one was the rejection zone, and this golden one is the bounce zone. And I should have suspected that there was going to be a bigger bounce than maybe I had considered, because I just considered this a DCA zone. I didn't really consider it a really big bounce zone, but it's turning out to be one. Okay, like we went from 25,500 to now 30,800. That's huge. Bitcoin made a $5,000 move. That's huge. Okay, that's very, very rare. I wanted to show you those fibs, and then also again, like I wanted to show you more about these fib channels that I'm using. And you can see here, let me go ahead and put on the line graph and take off these EMAs. But you can see here with my fib channels, right? Every time we get onto one of these fib channels, we kind of have this breakdown along it, and then we bounce up to the next one, a breakdown along with it. This one, it's easier to see with the candles. You can see this breakdown. And then this one, you know, this one actually just pumped through two of them right here, but it did have the breakdown on this one. This one pumped through two of them, and then it had a major breakdown, wicked down here. And then it crawled along it until it got to the next one, and then it broke down, and then it pumped up to this one, and then it crawled down it, retested it, and then look at this. It pumped all the way up to this one up here. And then same thing, broke down, broke down, broke down, broke down, and crawled along it, broke down. And the one thing that I wanted to show you, like why I'm telling you these things at the same time, is because look at this wick. It went all the way to the previous fib channel. Isn't that incredible? Went all the way down right to the fib channel and then stopped. Now, we do know that these things can pop up to fib channels, and that's pretty rare. So there is the possibility that we could drop down to these really low numbers, like 14,000. Like we could drop down 2 levels, right? 3 is highly unlikely, but 2 does happen with regularity. And so that could suggest like this $14,000 area is like kind of a, you know, kind of a major low. And if there's some type of, path that we're putting in or something, like it could potentially be lower than you think. Like just imagine that something just crazy happens in the world. And so you would think that, okay, maybe 10,000 is the absolute lowest. And that's pretty consistent. That's pretty consistent with, this type of fractal that I've suggested could play out in the worst case situation. So again, like I'm showing you that these are real possibilities. And when I put this fractal on this fib channels, it's just so funny, like how it aligns with the fibs perfectly until it finally, it even retests this one, it retests this one, and that, and then finally there's a breakout. I'm not saying that this is going to happen. You shouldn't trade off of fractals, but it is interesting that there is all of this confluence just in case we do have a major black swan and that wasn't the low. There's the possibility that we could, either grab onto the bottom of this channel that we're in and go lower, or we could even break down because crossing one line is possible before you go to the upside. Like it's common. Let's go ahead and look at some, of these horizontals, right? So let's put on this fib channel here. And if we just chopped out this area, it would suggest that the most likely one would be this $22,000 kind of a DCA area. Like if we just stay within one channel and just kind of like maybe touch the top of that, like at 34,000 or something, 35,000, which again is the top of that fib channel. So all of this stuff is very confluent. And then let's say we come back down, just kind of grind it out again, you know, again, like maybe 18,000 within this fib channel, okay? And if we broke down, then again, like that $14,000 area could be on the table. And it would have to be some just really destructive event to get us below that. I just don't even think that's worth considering. But I put it there just to have a plan. And so really, I think we're talking about these levels, and the major target is probably this 22,000. But definitely reserve some, some reserves for this 20 to 18,000, just in case we wick there, like this huge wick, right? And of course, just a small amount of reserves or some stop losses. If you happen to DCA in these top areas, you have some stop loss for those purchases. And then you take those funds and apply them just in case we get super low, right? Just basic trading so that overall, you're weighted to the downside. You don't want your price that you bought in at to be weighted to the top side of these DCA areas. You want it to be weighted, at least to the middle or the bottom. That way, if we do have some time to chop stuff out, on average, you can take profit earlier in case you need to. And then you're able to buy pullbacks better. And of course, for our alpha origin channels, we can kind of see where we're at here. Oops. We've crossed basically halfway through the blue DCA area. So that's very exciting. That's very exciting. And then the green area is just buy everything that you can buy, right? So who knows, if we keep chopping through this, maybe we can get a couple more DCA levels, and that would be very cool. But again, like we could come and test the top of this like yellow line because we broke down from it. We could come and test it, right? We didn't do that in 2008, but you can see like in 2019, we did. We broke down from it, and then we popped back up and tested it, and then we broke down again, then tested the level underneath it, broke down in COVID, and then tested the level underneath that. And then we found a double bottom on this diagonal. So these diagonals really do matter. Like it's just amazing. They tested this level, they tested this level, they tested this level, and double bottomed on that level, and then we went up. So there is a diagonal logic playing out here. I do think I've found something very interesting, which is why I've made this alpha origin, channels. And you can see we broke down here, we broke down here, and we basically wicked down to this one and this one. So one by one, we're hitting every level that I've been talking about. And we weren't quite able to reach this one, so we did wick back up, and potentially we could test back up here at 35 because that's the level, right? That's ahead of it. And, just hypothetically, it is possible that we could get to that 40,000 and then break down, do stuff like that, work our way around, sort of like what we did here, right? Or we could just fall or whatever. But I just want to keep you open-minded that there are various possibilities, and you don't need to be a perma bull or you don't need to be a perma bear. You can just understand that there are possibilities, and that if we start entering this area, just buy as much as you can, right? Close to this red line. For bullishness, I really need to see us above this horizontal red line or this yellow line. Like that would tell me like we're doing some type of weird run. But otherwise, we're just in a diagonal upward accumulation trading channel. Here's just kind of an alternative take on it. My alpha origin channels are highly vertical. Um, if we zoom in, it's not really that vertical. Like it's actually pretty reasonable, just appreciation of the asset over time. And so price on average goes up. That's why these are diagonals. But if we wanted even a slower appreciation, then we can consider these diagonals, which work all right in terms of hitting some of these major supports. The top of this sits on it. The top of this sits on it. And then you might consider that we're breaking down here, just like we broke down here. And then there could be a bounce and a wick down to the next level, just like this. And this could be the double whammy, right? This could be the double whammy that I was talking about, where maybe this is a very unusual year and we end up putting in something like that, okay? Because of the stock market and because of how the world is. And what that would look like on my origin channels would be something like this, in which case this would just be like, guys, like accumulate. If that double whammy happens, not just one capitulation, but two capitulations, like two mega capitulations, that would just be amazing. And you can kind of hear the greed in my voice for that. So that tells me that, maybe that's not going to happen. But again, it all depends upon the stock market, upon the war by Russia on Ukraine, upon the Federal Reserve, and upon inflation, and whether or not we have a global recession or not. So any of those factors could spin out of control and could bring us down to this second level of capitulation. But any of those issues could also be cleared up or have some type of white swan event as opposed to a black swan event, which could propel us higher. And so you want to be open-minded to both. And I mean, this thing has just been pumping. Like Bitcoin has been pumping like while I've been making this video. So I'm assuming that altcoins are just going also. And that tells me we haven't capitulated yet. There's just so much interest, we haven't capitulated yet. So again, I would expect a second wave eventually. Let's see. On the macro, a lot of guys didn't believe this geometry that I pointed out and created here, this hypothesis. But take a look at that. Take a look at that. I created this geometry a long time ago. You guys remember this thing. I created this a long time ago. And hey, like we're even earlier than I suggested. And look, we came to the exact spot that I marked out. Look at this pink angle here. And then look at where our price action is. It's It's exactly lined up. It's 100% exactly lined up. Look at that. Of course, I expected it later, but this was just such a fast dump. Just look at that. And so that just suggests even more to me that, maybe we grind this out, even if we have a pump, maybe we grind it out along this kind of diagonal that I had pointed out here, and that maybe somewhere in this area, at the end of 2022, we see just a major turnaround and then some type of fake out. It could go here, it could go here, you know. But anyway, we get some type of run after everyone's totally exhausted, you know. And then we probably have another setback before we eventually go in like 2025. Okay? Guys, like this stuff that I'm drawing out here, like it's working out. You remember how we started this episode? It was working out, right? Like those calls were like brilliant calls. They worked out. I'm not saying this will work out. This isn't a call. This isn't like what I posted at the beginning of this episode. This isn't a call. I'm just saying, like, let's keep an eye on this stuff. Okay, let's keep an eye on it. These were signals that I had made using my various indicators. I said like this was a green signal. I had some green signals, back here, green signal here. This signal I told you was a mixed one. And look, like of course, like it went down and up. Like it wasn't as like up as these two were. This was very mixed. And then I had like a negative signal here and we dumped. So just passing through, just checking some of these things. This is some kind of like channel that I made a while ago. You know what's pretty interesting? Like where we wicked to is right at the bottom of that channel that I drew. I mean, this isn't perfect or anything. I'm on the weekly, the daily. Let's see. Just a little bit of adjustment here. Like this is more of a zone anyway. Is this weird because of log? No, it's just I'm sloppy, that's all. Something like that. Where, where you can obviously see like we got rejected from it, retested it, got accepted, retested it, bounced up, got rejected, test the bottom of it, retest the top, got rejected, and look, we're testing the bottom. And now, what are we doing? Rounding back up. Our price level is here right now, right? Like this just was a V. So like we're right here right now. So we've actually started to round up. Now the question is, like this is kind of the center of this thing, which again, like this was very sloppily put together because, I was just having an idea. I was just, making this on camera, just kind of, talking it out, just showing you what I see. And so this isn't very well drawn. All of these lines are not properly made. But again, like this would suggest a mid area around, let's just say that we keep pumping kind of vertically around that $35,000 area. And then that would be a good place to potentially, oops, that would be a good place to potentially get rejected from. All right, let me just move this back a little bit. So let's say that we pump up, we get to this mid area, like we could come back down and then grind out those areas, right? If this really is a channel. Maybe come back up later. Or break down to this channel, right? We could break down to this channel if we get rejected from this midline. Just interesting different ways to look at the market. I know everyone's going to have their own preference. Some people don't like sloppy stuff, but I like thinking out of the box. I think there's a lot of channels that you can look at that's really professional traders just going through the basic steps of just, what everyone does. But I'm just really trying to think out of the box and just see in a new way. And if this helps people see in a new way of what might be going on, right? Like you can imagine what's happening, and then where would the next channel be, right? Like below it, right? And then that would suggest there's that $14,000 again, right? Like that would be the bottom of this channel pretty much. And the top of this channel, even if we pumped straight up, the top of the channel would be $43,000 approximately. And what did I tell you we needed to get over? I told you we needed to get over $44,000, right? And so we would literally have to pump out of the top of this channel. Like it's just so confluent. Like it just shows this idea that there is truth in this idea. This was a really weird one, but it was kind of fun, right? Like the eggs. So, like, this is kind of like a worm eating through eggs or through apples or something. You know, where, let's see, let's make them proper eggs. There we go. So let's just say, you know, it's an apple and this worm like gets in here, it eats to the other side, and then it does the same thing in another egg, and it breaks down from this spot here, gets into the next, you know, apple or egg or whatever, you know, right from that spot, breaks down, gets to that spot again. Look how crazy that is. You know, eats its way around inside of this egg. And, you know, I wasn't sure like how to draw the next one because this was a breakdown. Like this one didn't follow the rule, but it's weird. It broke down in that area. Like none of this price action existed yet. Like I had no idea where the next one would be. And it just so happened it broke down here, which is kind of like the other side of this, right? Like if this was over here, it would be here. If this was over here, it'd be here. And pretty much that's like, it's just like the flip of it. Just weird, okay? This was just for fun. Like I literally don't care anything about this idea. But let's go ahead and put another egg there. And I think they align kind of like that, just for fun. And let's suggest that, you know, we're going like this now, right? So maybe here to, oh, that's 22,000, you know, or what's the flip side of it right here? Like 30,000. So either we grind sideways or we grind down and we're doing the bottom of the egg, apple, whatever. The worm's going to eat its way through and, you know, pop out on one of these 2 points. So that's just for fun. It's just for fun. Let's see what happens because this, as far as I know, there's no real theory that goes with this stuff. So it's just for fun. But I'll leave that egg there and we can check on it in the future. Maybe here. Let's see. Oh, that's interesting. Yeah, I had, from the top of this point, I had marked out these circles as just like possible places I could see us dropping. And look at this. It just has followed it exactly. I made these a long time ago. And then this was the one I was saying like was most likely for us to. This is incredible. It's lining up almost dead center with that circle. It's incredible. And, you know, these are just some of the more weird things. So this head and shoulders here. Why is that so deep? Is that because of log scale? No, this would be the head and shoulders. Let's see, let's make that yellow. And then it would break down to here. And look at that, right there. That's exactly where we broke down to, right? So the measured move for the head and shoulders was right here at 26,000. And we broke down to 26,000 and then we bounced. A little extra wicking, a little extra panic in the market, but we bounced. So this head and shoulders played out. Like no one can say that this head and shoulders was invalid. It was a valid head and shoulders and it played out. And that's what I was suggesting when I marked out this stuff. I'm not sure why this one is so long. I must have had some type of thought that went with that. But I totally forget because it was such a long time ago. But the key point of this was the head and shoulders. I'll keep that there just in case I remember what I was thinking about. But the main point was this head and shoulders. And then let's see, there was something other kind of funny that I saw. Yeah. Oh, look at this! Look at this projection. I projected we would break down from there. So there are these banana shapes that form on Bitcoin. Like this is a banana shape, right? Oops. Just kind of weird. Just weird concepts, just weird ideas, just for fun. Just to see if it gives me any way of just thinking outside of the box, seeing outside of the box. And whenever you get to the top of the banana, whenever this banana sharpens, to the, that little tip on the banana, that you peel the banana with, then a new banana forms. Do you see this? Like every time, right here, right here, right here, right here, and then right here. And so, I mean, again, these are just stupid ideas. But let's just suggest like some type of banana, right? See, here's the midpoint. So let's just suggest some type of banana. Maybe like this. Who knows? Who knows? And then, just hypothesis. We don't have enough price action. We had this price action that I suggested that would be the point that we break down. So I'll have to wait to see how price action fills out this banana and, see how girthy and thick this banana is because at some point, it will just imply a tip. Like you could get this far in the banana, and then when it started to contract, you could project where the tip would be. You could get this far into the banana, and then if it started to contract, you could project where the tip would be. This one was very awkward, so I'm not sure that you could really do it that well. But yeah, I mean, I guess you could. You could actually, right? Yeah, look at that. Look at that. So you got past the girthiest part of the banana, and then you could project where it was going to be moving into something else. Let's see. This one is oriented this way, this way. This one flips. This one, this one, this one. Yeah, there doesn't seem to be a directionality, so it's not clear which side the flat side will appear on, like the flatter side or the more rounded side will be on. So you have to kind of like just watch. We don't know. Because you could also have a situation where like the flat side is over here and maybe it rounds like this. Like that could be devastating, right? That could be crazy devastating. So again, like you have to wait until this thing fills out. And then when it starts contracting, then you can project where the end of the banana is likely to be. You can like see in the future. And so this is just a really silly idea. Yep. And this is also like looking at Bitcoin as if it's like chunks of stuff, right? Like just breaking it down into chunks. And it played out like really well. I mean, look, after this chunk got created, like this was just a chunk, it broke down from it. And then it's making another chunk. So what would that suggest? I don't know, like this, maybe. Right? Sort of like what we were looking at the channels previously. And so here's another chunk. And where will it go from there? I don't know, but if we get a little bit more price action, maybe we can develop some concept. And it looks like there might be, not sure, because of this wick. This is like a really crazy wick. So, maybe something here. Just a concept. It's not important. Just trying to think in different ways. All right, guys, this video has gone too long, so I'm going to wrap it up. But you guys can understand what I'm trying to tell you is, you know, be on the lookout for the long run. This thing looks like it might want to go down more, but be open-minded to these type of pumps, especially when you're on support, and try to have, your concept of where you're gonna, DCA in and those type of things, because, you may not get a second chance, right? You may not get a second chance. And anyway, you can trade the different levels. There's always an up, there's always a down. You're probably not going to get locked into one space as long as you are actively trading and you don't hold on to it too long. So it doesn't matter if you take your profit here or there. Like let's say you bought you bought here and you say, I just want to hold on to this for a year. Well, why? You can just trade it when we got up to this level. Like you bought here, you can trade it and just sell it when we get to this level, and then you've made that profit. You're like, no, I just want to make my extra profits. Yeah, but you can buy in again if we retrace, or you can buy here if we catch this as support. Like you can buy it back, but at least you took your profit at resistance in case we fall all the way lower, and then you have more money to buy down here, right? And then you just keep repeating that. It's more work, and you have to be strong-minded about it. Of course, you can just DCA and hold if you just want to have a really easy time, but you don't know how low this is going to go, or when it's going to turn around, or how long you're going to have to be holding for. So those are just the concepts that I'm telling myself, of course. And if we look at these EMAs, of course, we are in that area that could hypothetically be the bottom, and thus it could have been the best chance to ever buy in. My concept is probably we're going to chop this out some more. And anyway, we don't have any confirmation of like bullishness in our EMAs, so like I don't feel stressed. All of this stuff still looks pretty negative. Looks pretty negative. So until we start getting bullish crossings, I'm not going to feel like I missed out on anything, even if you didn't buy this wick. You see how all these EMAs are like tightly packed up there? They're all tightly packed up there. Let's turn on this line graph. Let's just turn off the price. See how they're all like pointed down and tightly wound up? You really need to see this happening, right? Like this kind of unfurling of this knot, just unfurling. And when we see that unfurl, then we can say, okay, like I better be buying in my DCA, right? Better be buying in my DCA. Or if they just turn positive, like here they got kind of knotted up, but they quickly like just straightened out. Like if they just straighten out, then you can say, okay, we better buy in because like the EMAs got straightened out. So yeah, we missed this, we missed this area down here. Dang it. But I can see that the EMAs are straightening out, so it's time to get back in, right? But as long as they're knotted up like this and like this, you can just pretty much assume that they're probably going to unfurl and that we're going to have more downside. Just most likely. All right, guys, that was your alpha for the day. Stay safe and happy trading.